Hey everyone, Andy Moss here, tradingadventures.com with a run through of the weekly charts for Christmas week. It is December the 27th, and we've just seen what was expected to be a very light volume, very slow action week, shortened by Christmas. Hope you all had a great holiday. So here's the SPX, S&P 500, doing what it's supposed to do, recovering from last week's dip, adding confirmation to that move, and getting up here very close to this extension level we've been watching for a while. All the moving averages are doing the right thing. It's above this anchor off the November 17th dip, which touched this anchor from breakout move back in June, and so on and so forth. NASDAQ 100 stocks not quite as high, but advancing well and back up into the neighborhood of an all-time high weekly close, looking up at 637.01, which is the top of the Bollinger Band, and there is a extension level up near 658, call it, to keep an eye on as we move into the beginning of 2026. Dow stocks, another nice move off of last week's selling action that didn't take it down very far at all. And once again, light volume, healthy RSI, all the moving averages are doing the right things in the right orders, and nothing to be concerned about as of right now. With that, the small cap stocks are a little behind, but we're very used to that, and still holding up very well. This is a 4-week moving average right here, and holding up in pretty good shape. In the upper half of the Bollinger Bands, which are tightening a bit after this broad move here. RSI is good, volume is light for the week, and no concerns for now on the small caps as well. International stocks, more of the same. Not quite participating like most of the rest of the indices we've seen, but holding up fine and testing this trend line area here, this pivot area here. It's got the 40-week moving average coming along right here and flattening out just a little bit. But unless that starts to curl over and price gets below, nothing very concerning there for China either. Just taking a bit of a rest here. Moving into bonds. More consolidation down here below a couple of moving averages and in the lower half of the Bollinger Bands. Not broken, RSI holding above the 50% range, and we do have potential support down here and a bit of a trend line and the 40-week moving average. So nothing exciting, but nothing too concerning there. Just a bit of a corrective move or a drift downward continuing in bonds, even though we did see some strength here this week. It's running up against this 4-week moving average in the Bollinger Band center line. So we'll keep an eye on that. Government bonds, more of the same. 3 weeks of consolidating action below this pivot area, below and now declining 40-week moving average, and the 10-week up here above. So looks like more downside is the more likely course for TLT here. Whoops. But, not breaking down and running away lower. High yield consolidating here, really pretty flat for several weeks now, and Bollinger Band's tightening as it tries to decide which way to go next. And then the dollar still drifting lower from this resistance area, from this rejection at the declining 40-week moving average. No assumption of strength in the dollar. On Bitcoin and some cryptocurrencies, Bitcoin is still really struggling below this anchor from the August 24 dip and going nowhere fast, just getting tighter and tighter here for about 6 weeks as it tests this kind of pivot area. And this continues to be a bearish consolidation under all the moving averages, under this anchor VWAP, with a more likely course of a resolution lower, possibly down to test this 74,000 area, or maybe even into the upper 60,000s on Bitcoin. Looking at a couple of the other cryptocurrencies, Ethereum, really pretty messy here under this trend line, and after this rejection up around 4,800, it is below all the moving averages, a little more wide and erratic, but another bearish consolidation pattern taking shape down here below a rising 40-week moving average. And Solana is just drifting tightly lower, with this 4-week moving average kind of being a lid and keeping things from progressing too far. So no reason to get too excited about Solana unless it could get above this moving average and stay there as it starts to pick off the rest of these. But that is one potential scenario that at this point seems like a long way away. Back over to a quick look at the commodity group. We're fast. Seemed very comfortable staying right in this $22 to $23 area, even though it's a decent pop after last week and back above this pivot and the moving averages. It's a pretty low confidence thought that it would get up here and stay after so many rejections at around 23.70 in that neighborhood. But while that consolidation happens, RSI stays above the 50% range, and the moving averages are still sloping slightly upward. So it has potential, but would need some convincing. But with a move that got above and stayed above this area finally. Drilling down a little farther, I don't have to tell you what happened with precious metals and silver. Just continually astonishing move in silver, with a really large green candle here this week, taking it up over 70, over 71 for the week, with RSI nearly 91. It is very extended. The moving averages are very steep with a lot of separation between them. You got to say it looks ripe for some rest and consolidation, but certainly not showing signs of that taking place yet. Gold is in a similar move, but after more rest and consolidation here. It's not nearly as extended. RSI still above 80, which is pretty high. And with this gap and go move here for the week, it's very strong. But backing up to oil, continual drift lower below the moving averages, which are all sloping downward. Look at our relative strength indicators, growth versus value, healthy, and moving between the declining 10-week and rising 40-week. Could be a potential head and shoulders pattern here, but that would be a long way off if it even mattered. So nothing really to be excited or concerned about there in growth versus value. Consumer versus consumer staples takes another move back in the direction of risk on attitude, with the gap higher this week and up near recent closing highs. And high beta versus low volatility, the same. Moving it high in the recent range, with the moving averages rising steeply in the right order. So a clear sign that risk appetite is healthy. Yesterday's long lower shadow, not quite at closing highs, but doing all the right things as semis and, of course, NVIDIA get a little firmer footing after their recent relative weakness. So that's a look at all the sectors. Let's take a look at breadth for a minute. S&P 500 stocks above a 50 and 200-day moving average, continues along in kind of a middling range, but healthy. Slight increases here this week. No concerns there. Percent indices. We can see the NYSE bullish percents are still hanging around up here in about the 60% range, looking fairly healthy. SPX not quite as high and backed off the recent move a little bit, but holding up just fine. And finally, the NASDAQ 100, but still holding up well after taking out this bearish resistance line. So breadth is doing just fine as well. The calendar will take us into the end of 2025 and the beginning of 2026. It's not a very busy calendar. It's another holiday shortened week, and we don't have anything too exciting as far as economic data or news releases. We've got the normal stuff, pending home sales, some other housing data, and we do have the FOMC minutes on Tuesday afternoon, and the market will be closed Thursday for the New Year's Day holiday, and then the Fed balance sheet on Friday. So nothing very exciting there next week either. Overall in the markets, as was expected, with light volume and not a whole lot of activity. We are 2 days into the Santa Claus rally period, which, if you recall, is the last 5 days of the current trading year and the first 2 days of the next. So we've got to start here looking from this close to this close positive by about 1/3% on SPY. So it's a decent start. This is a pretty tremendous move off of this big red candle here. We're back up to the top of the Bollinger Bands, back into new highs, and the bands are much tighter now, not nearly as extended on price action as the 8 and 21 day moving averages here are close underneath. If the price stays up here for the next few days, this 8-day average will cross back over the 21 day, and we'll have all the moving averages doing the right things, price above all the recent anchored VWAPs, and not at all extended or overbought as far as RSI goes. So the market's just kind of doing its thing, slow, steady strength that looks like it could continue into the year end, with the caveat that this is a bit of a short-term extension here, that maybe it corrects and comes back down into the 684, 683 area. But with light volume and another holiday shortened week, wouldn't look for anything too fantastic. The 30-minute chart over here shows, here's the weekly anchor. It's rising very nicely. The 5-day moving average is coming up pretty sharply, and things are just kind of smooth sailing here recently. An uneventful recap of the weekly charts as we closed out what was a mostly quiet and uneventful week. We'll see what happens next week and get ready for 2026. As the markets are a little slower, keep in mind now is a pretty good time to think about doing less. Don't force trades out of boredom. Run through your trading journal, make sure everything's up to date. Do your year-end reviews, identify what you did well, and write some well-defined specific goals about what you want to do better and more of heading into next year. So we'll have more as the week progresses, and hope you all have a great rest of your weekend.